you've had these issues before where you have brand unsafe content matched with, advertisers that are paying monetization. And I think it's kind of the same thing. It's like, how do you separate, the stuff that's really grimy and gross with stuff that's like kind of fun and frivolous and should be, fun for speculators. And that's kind of what the economy is built for. But it's in any of these ecosystems, if left unchecked, you're going to have, people that can do kind of like gross stuff with it.
Hey everyone, this episode is brought to you by Uniswap Labs, who is launching the largest bug bounty program in the entire history of crypto. It's a $15.5 million program. This is aiming to be the most rigorously reviewed code base ever deployed to Ethereum. So if you want more eligibility on the scope, rewards, payouts, etc., just click the link in the bottom of the show notes, tell them that I sent you. You'll be hearing all about Uniswap Labs later in the program. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. Hey everyone, welcome back to another episode of Bell Curve. Today you got Michael's 1 and 2 holding down the fort. Vance is out sick, so pouring one out for Vance today. And before we get into it, just want to give a quick shout out to this episode sponsor, Aave. Aave is the largest liquidity protocol and one of the oldest and most trusted protocols in all of DeFi and crypto writ large. They've got over $20 billion worth of TVL. You can supply, borrow, swap, stake, do whatever you want, all on Aave. So thank you very much to Aave. And then Michael, how are we doing?
Just the best, Got the two champs on the pod today. That's all we need.
Yeah, we've separated the wheat from the chaff here, so this will be a good one. Been a relatively slow week, I feel like, in terms of news, but one thing that I was curious to get your take. I thought we could maybe, we should be doing our own predictions. Actually, we got to revisit the predictions that we did last year and see how those hold up. I can't really remember a lot of them.
Gonna have to go back and check.
Yeah, the one that I remember because it was so bad for a while was the NFT call, which is squeaking in just at the end of this year. Those budgies.
You got 18 more days to make it happen.
Oh God, do you see? So here's the thing about NFTs that I still find compelling is I know everyone hates this, but the profile picture thing, it makes a lot of sense to me that people would want to pay a lot of money to flex to some cool profile picture. The problem is maybe NFTs aren't cool anymore and never will be ever again. So I'm not really sure if it applies, but I've never hated the PFP thesis.
Yeah, no, I think look, this perspective goes all the way back to like 2017, 2018. And, for those that don't know, Vance and I started an NFT company back then and spent a lot of time in the space before anybody really cared about it. I think the thing that we were talking about back then, which is still true, is there has to be a canonical like display case or a place to show it off that's how you have the sentimental value or just like the aesthetic value of whatever it is that you're buying. And PFPs were the thing, and they didn't really exist as much in 2018 2019. Some people were using them as PFPs, but now that you have the social profiles as the core construct of the social infrastructure for crypto, of course, that's like your display case. And so that I think is something that will always be real. But until we have like a crypto native consumer application ecosystem or like a place to show them off, I think PFPs is kind of like the one venue that you have to be able to show off whatever you have.
Let me ask you this. So for something like Pudgy Penguin specifically, there are airdrops that are coming up here. So they announced that there's going to be a Pengu meme coin, which is going live on Solana, actually, which is relatively interesting because the team behind Pudgy Penguins is also developing their own L2, which is abstract chain. And so I think people for a while were thinking about an abstract potentially airdrop for Pudgy Penguins holders, and now there's been explicitly promised some Pengu meme coin trading. So what do you think, though, about NFT collections that also end up launching a token? There was I guess a couple parallels to this. There's obviously Bored Apes. So Bored Apes have many different collections. Maybe on a smaller basis, Tensor, which is one of the at one point was the very dominant NFT trading platform on Solana. They had an NFT collection, Tensorians, and then they also did a token. And I'm just curious how you think about these, because I'm sure that's why Pudgy Penguins is running up right now in terms of price. But What do you, from a mental model perspective, how do you think about these events where there's already one collection and then another token drops? How do you think about that?
Well, so I think in the same vein as what I was just describing, you could kind of boil this all down into utility. It's like
Yeah.
social utility, which is showcasing whatever you have, and that's what I mean by the display case. Then there's like, Bored Apes went after the real world utility with like Ape World and all the different events that they would hold, and you had to have it to get in. And like everybody's been testing these different. How do you provide or imbue utility and functionality into this asset that you have? And an L2 and an ecosystem could be an interesting way of getting in there. It's just you have to be able to continue to deliver utility and value. And so like the question would be, what is the value, and is it something that the holders will care about? Is it something that people will ascribe consistent value to? And the tough part is, I mean, I think the downfall of something like Top Shot was, and it ran up massively in 2020 when it launched, and it was the first. We have friends who were like Top Shot whales, and they were like, "Yes, I got, you know, Clay Thompson dunking in this sick, shot," and what everybody forgot is that, oh wait, next season he's going to do the same thing, and there's going to be another one of them, and like the
Mm,
original that I had was going to be diluted by more plays. And so I think you have to balance scarcity with being able to have utility, and also building a larger and larger audience. And like that's such a fine balance where
yeah.
if there's only 10,000 of them, there's only 10,000 potential people that can have them. So that's the community size, the terminal community size. But how do you grow that into something that is massive? And all of these things I think of as interesting experiments. I don't think that there's like a version that is by and large working right now, other than PFPs. I mean, PFPs are coming back. They've been through the bear cycle. You may have correctly called that,
Trend.
but
So
yeah, it's all interesting to see kind of like these shots on goal.
here's what I've always squinted at and seen something interesting with NFTs. There's a media angle to it almost. There's kind of two different business models in media, which is you want to be mass media and just get as large of an audience as you possibly can. Because of its size, it ends up being commoditized and you sell ads against that large audience. Then there's this other model, which is, I always think of this sort of as the Barstool Sports model, where I don't know how many true fans Barstool has. Maybe I would guess somewhere in the range of 100,000, something like that, of just true everyday tune in. You're reading the blog multiple times a day, you listen to podcasts, and this is the audience that actually might go to live events and stuff like that. And so
Yep.
even Barstool's got this ad network, but really at the core of the business is these 100,000 people that they can actually get to do all of these things. And Blockworks has that too, to a certain extent. We've got there's an audience of really core. I don't know how many true fans Blockworks has versus our actual audience size, but that's what NFTs seem to serve a little bit. So that's an interesting mental model for, yeah, you're absolutely right. There's something limiting about only having 10,000. So it's almost like you want to scale your collection relative to what you think your true fan audience size is. That's an interesting concept to me.
Yeah, it's like I don't know if this is a clean analogy, but like Wall Street Journal would be like the business community, but it's mass, right? And it's everybody who wants to read the Wall Street Journal, and then like media companies have been trying to figure this out for the last, I don't know, probably decade at this point, where it's like, where do you put the paywall? Like how many articles can you read before it's like, oh, you got to pay for it, oh, you got to subscribe, and then on the other side you've got, and I it definitely was more relevant earlier this year, but like Politico Pro, where
Yeah.
if you work in DC, if you work in politics, it's like a required subscription to have. At least, that's my understanding. And if you don't, then it's probably not as relevant because it's super in the weeds, it's super deep, and it's all the scuttlebutt of what's happening on Capitol Hill and in DC, and you kind of have to have that to be in the know. And so that's like a more high level but segmented audience, and you're not going to be able to run ads against that, but they're paying, I think, I don't know, like 50, 60, maybe $100 a month to be able to get that. And so yeah, it's like a media company is actually a really interesting analogy
Mm.
for how to think about NFTs and NFT collections. What I think is really hard is once you've chosen one of those paths, if you're mass or if you're kind of like really refined, and switching, being able to have both or try to go from one to the other, I think is a really hard thing to do, because it's like, if you started with 10,000, it's hard to
Yeah.
like 10x that. If you want to go from 10,000 to 100,000 or a million, how does that make your original audience feel? And so yeah, it's a hard thing to solve.
Hmm. So this is also, I think you gave still to this day the best explanation for meme coins that I've really liked, which is maybe it feels a little bit like the early days of the internet where you had those weird viral YouTube videos that you might remember from 2008 sort of time frame. And I was thinking about that actually this week as well. Did you see? So obviously there's this CEO assassination of United Healthcare, and there's an assailant that was led on a pretty public manhunt, I would say, and it was all over the news. And you had this guy's smile, and I think they ended up getting him. And the guy is Luigi. I mean, allegedly, right? We haven't gone to trial or whatever, but Luigi Mangione. And there was a
He's been
Luigi.
so we can
How's
assume
he?
that sufficient
Okay.
evidence. Yeah.
Cool. So there was a meme coin that got launched, Luigi Mangione, and it just pumped. And first of all, that is disgusting. No one ever likes to see people making money off of something like that. But if you look at meme coins as this attention-based algorithm, it's kind of like, yeah, I mean, there's a lot of attention that's going towards this guy. It's in a negative way. So you could look at it as a really gross exploitation of a really tragic situation, which is the right way to look at it, I'm sure. But also, if you look at meme coins as, hey, this is a way to like a market-based algorithm for attention, then it should be going towards even things that are negative also.
I mean, yeah, there's the attention economy. I think is changing in terms of market structure, and I mean, one of the things that so I was at Snapchat and worked on the monetization side and built ads product and a bunch of other things there. But one of the big things that any of these ad platforms have to deal with is like if you've got uh, advertisers that are paying hundreds of thousands, millions of dollars a year, they want to know that their ads are running alongside content that's not brand unsafe.
Mm.
And like one of the situations that Snap didn't run into, but I can't remember which platform, but when the Washington Post um, journalist was killed, and there was like all these stories about how he was mutilated and terrible stuff, and like taken out in a luggage, like that connection in the algorithm on one of these platforms ran with like in a way uh, advertisement. And so you've got like you've had these issues before where you have brand unsafe content matched with advertisers that are paying monetization. And I think it's kind of the same thing. It's like, how do you separate the stuff that's really grimy and gross with stuff that's like kind of fun and frivolous and should be fun for speculators, and that's kind of what the economy is built for. But it's in any of these ecosystems, if left unchecked, you're going to have people that can do kind of like gross stuff with it. And I don't think that there's like a checks and balances that'll work, but we're at the stage of like anything goes right now. And I'm sure it'll change eventually. I mean, you've already seen Pump like kind of change their process with the live streaming, because that was getting kind of weird and also gross. And I think you're going to start to see some of the platforms that are doing meme coins like recognize they can't you know put out anything just because there's going to be people that do anything. So we're I think continuing along this timeline, we're still in the like mid 2000s range of the attention economy, but now applied to meme coins. But I think as you get further and further down this process, it in a weird way kind of legitimizes it, because it forces them to have conversations and think about these maybe fringe cases that wouldn't have otherwise popped up when you were conceiving the idea of pump fun and meme coins. Nobody really thought about like what happens if somebody does a Luigi coin. And I think now having to answer those types of questions will kind of in a weird way legitimize it once they solve the problems.
So let me ask you something. I want to check in on just Solana or like the meme coin market in general. So what I'm showing here is this is the Blockworks Research Solana dashboard, and we track something called the REV, which is transaction fees plus MEV tips. So you can see Jito absolutely cooking here, but there's also priority fees, base fees, and then this little yellow bar here is vote fees. And I'm probably going to get shouted at this by some Solana people, but this I feel like is basically representative of the meme coin market and what's happening. And And my question is, how are you feeling about the current? There's obviously been a decent sized drawdown in terms of REV since the peak back in late um, late November, and so this has been one of those really difficult charts for a long time where it looks like there are these peaks, but then it ultimately just ends up coming back much stronger, and it's hard to predict where the meme coin market is ultimately going to go. But I don't know. It's been this one has been a really tough one to follow because on the one hand, there's just so much supply coming online from pump.fun every day. It also, I can just, that meme that everyone likes of the roller coaster where the first one is really big and
Yeah.
then the others are smaller. And,
Yep.
meme coins now, it used to be they got to, 1 or 5 billion. Now they got to 100 million was sort of or 500 million, 100 million. Now most of them are just going to 20 before they die. All of those signs to me, just pattern matching, say that at some point here, it's just not looking super healthy. But what do you think about the
Well,
current?
look, the lifeblood of all of this is liquidity. And I think what you are seeing, in this chart in particular is, what happened in that what happened in that middle first week of November while the election happened. And that's when you had, excitement, exuberance, but you also had much more liquidity, much more trading volume. Assets started to go up. The wealth effect in crypto for crypto natives went up. And what was the first thing that people were going to, continue to punt or speculate on? Of course, it was going to be meme coins because nothing had materially changed other than asset values going up. I
Mm,
think the what you can probably say with this chart as well is there's a couple of factors that are going on simultaneously. Number one, you've got a lot of competition happening on other platforms other than Solana. You've got base meme coins. You've got people are talking about how Bear Chain when it launches and is going to be sort of like a meme chain, meme coin platform. I think you're going to start to see the fragmentation of, in particular, the Solana meme coin ecosystem. And not to say that they won't all continue to do well, but I do think that you're going to start to see the same types of products in different ways. I mean, we've seen pitches for basically pump fun on every single chain. And maybe not all of them are going to work, but some of them may start to steal share, especially in an Ethereum based ecosystem. And yeah, I think the other thing too is like as other assets, and nobody really knew what was going to happen, or at least prediction market said it was 50-50. I think some of us who kind of understood the tea leaves knew kind of the election was going to go in this way. And leading into 2025, I think you're going to start to see,
so
exactly.
this is base. Yeah, this is transaction fee revenue. We don't have it quite built out we haven't built out REV yet for this chain, but yeah, this is priority fees, base fees, and L1 fees. So for folks, so L1 fees are basically just the pass through of what base has to pay down to Ethereum.
Right.
Um, Base fees or priority fees are obviously what people are paying to move their transactions to, probably the top of the block or whatever it is, and then base fees are congestion. So
Yeah, exactly.
yeah, super representative of, and I completely agree. There's fragmentation across different ecosystems and chains here.
But and so I mean, we don't know exactly what's in these priority fees. To your point, we don't know. There's been a ton of activity on base in general, and so it's hard to disaggregate like exactly what this chart completely represents. But I think what I was sort of getting at broadly is there's fragmentation across meme coin platforms. There's also going to be fragmentation across categories. And if we're
Mm,
thinking about the global liquidity profile of crypto, across every single asset class, DeFi, games, layer ones, meme coins, like all of them are fighting for, in the short term, the aggregate liquidity that is available. As assets go up, liquidity potential goes up as well. It's like, potential energy versus kinetic energy. And, and I think you're going to start to see fragmentation away from meme coins as other asset categories become en vogue. You've seen over the last couple of weeks, gaming has taken a narrative,
mm.
and game chains, game coins have been doing really, really well. I think in one of our, not huge spoiler, but of course, 2025, one of our predictions is that DeFi, especially the kind of like OG DeFi, comes back in a meaningful way, especially with regulatory change on the horizon. And so yeah, I think you're going to start to see like multiple layers of fragmentation across Solana meme coins, but meme coins in general. And someone who's trading meme coins maybe looked at some of these DeFi protocols that are cash flow positive, buying back their own token, and say, okay, well, I can continue to punt these meme coins that are losing their luster from a market cap perspective. To your point, or I can go and like speculate on other things, and it's just kind of a question of like attention and liquidity, and who's driving what.
Yeah, so I was just trying to draw up. I would love to talk to talk about DeFi here a little bit as well. So we had on our docket that World Liberty Fi is buying up Ether, and then also apparently Aave as well. Someone found tracked their address on Arkham and saw that they're buying that up. Before we get there, though, I had one thing about I think that the Solana as being the home of meme coins, I have less of a perspective on that. I think that it's still probably gonna be the canonical home. Even Pudgy
Right.
Penguins launching Pengus there is probably indicative of that. But around the edges, right on the margin, I think you are gonna see that market get eaten into. All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty aims to make it the most rigorously reviewed codebase ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap v2 and v3 without a single hack. So Uniswap v4 is dedicated to bringing that same level of security and transparency to the v4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there's a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today. I got a question for you. What are your thoughts, if you have any, on Hyperliquid? I've missed Hyperliquid. So I'm in the Cope Sieve camp here of the people but I don't know. Just pattern matching here, it feels like Hyperliquid has potential to just be the fastest horse this cycle and make everyone angry because there's a bunch of people that are sidelined, right? It wasn't a VC invested coin in the beginning. It's rare that you see a coin come out of the gate this hot and just it's offered no dips to buyers at all. It's gone straight from $4 to 18. And I don't know. It's also started to, I've noticed it's starting to trigger Solana people a little bit, which I find kind of interesting because this is exactly what happened with Solana and ETH, right? And I don't know.
Nasdaq on chain means that you got to build the Nasdaq on chain.
Yeah.
And right now, it doesn't seem like that's the narrative. And I think Hyperliquid, hats off to them. We know the team. They were a very, very successful prop trading firm prior to starting Hyperliquid. So that afforded them two things. Number one, a large capital base to not have to require venture funding. So they were able to self-fund the entire way through. And number two, they understood market structure and crypto market structure and how to build a Hyperliquid to the point where it's now competitive with, I would say, at least on the path to competition of centralized exchanges. I think it has definitely, stolen kind of the narrative of the trading execution engine on chain, which was supposed to be, what Solana was, but we got meme coins instead. And I think the existential question for Solana is going to be: can you bridge to other application categories? I saw this was I can't remember where I saw this, but I saw that over 90% of the volume on Solana is meme coins, or the fee volume at least, because many people are trying to pay these priority fees to get into these transactions. And so the narrative that is overwhelmingly the case on Solana is meme coins, and that leaves a void for other opportunities like Hyperliquid. And they're going to continue to operate and execute, and it's kind of like they're running in a direction where others now have to catch up.
So what I've been wondering about this for a little while is I'm from obviously the long-term hope for crypto is that we move all these different types of applications on chain and that transactions from gaming or DePIN or whatever ends up getting settled down and recorded on a blockchain. But from a business model standpoint, from an L1 or an L2's perspective, I'm kind of wondering or questioning whether anything other than trading is really good from the business model standpoint of a chain. And the reason, I mean, even we were talking about something like Base, right? And if you just look at their model, they've got three buckets of revenue. There's the priority fees, the congestion fees, and then the L1 fees. And all those are recorded as revenue, but whatever fees the L1 is just a pass through, right? Like basically Base just passes on the cost of settling to you as a user. So technically that's revenue for Base, but there's no margin, right? It's just a pass through cost. And then
Correct.
when you look at the other parts of where that revenue is coming from, there's the congestion fee and then the sequencing fee, and or sequencing, and congestion fees should go down over time. It's kind of a funny concept. It's just how big can my how quickly can I offer computing, and basically the delta in between my total computing power based on whatever however many um, nodes I have and whatever the hardware requirements for those nodes are. Like anything in excess of that is what I'm going to charge apps. But it's you're kind of setting this weird arbitrary mark, and anything over that is what you get charged. So that should be really commoditized down to almost nothing over time. And so really where it seems like the value is just preferred inclusion at like top of block. It's I don't know. You know what I mean? And then why for DPIN or anything like that would that even be valuable? That's going to fall into that L1 pass through bucket. No one's going to pay for. Um,
Well, so a couple of thoughts. The first is maybe an analogy to think about here would be in the case of Base, like let's analogize it with, I don't know, AWS. And you've got, segments of the cost structure of AWS are probably pretty similar if we think about them, where you've got hardware, which is the physical servers. You've got, I don't know, electricity and the overhead of like running the servers. And then you also have like people who are managing, the data centers and um, all of those costs, I think, they get passed along, but they get put into a single price. And like that's what the end customer of AWS sees. I also think um, when we're thinking about like what matters most from the business model perspective, what you're describing is with the core assumption of individuals and individual users as the core user of this infrastructure, where like if you think about it, like do I really care that I'm like trying to fight for someone who's putting through a trading execution transaction and needs to be first versus like I don't know posting on Farcaster, and like do I need it to happen right now or can it happen in 3 seconds is kind of the point I think.
mm,
But what if we were to assume that the vast majority of the transactions that are happening on Base are not actually individual users, but other applications or other ecosystems, or it's infrastructure that maybe can choose, okay, I'm going to settle this now, or like if the congestion is super high, I'm going to wait 5 seconds because it doesn't really matter for me when I settle it. It's just that I settle it within this period. And I think that is also how computer infrastructure has worked as well, where if you really want to be first and you are like let's say a prop trading firm and you want to have fastest connection with fiber to the exchange, you're going to pay and you're going to pay up for that. But if you're Facebook and you're built or Dropbox and you're built on AWS, it doesn't really matter which one you're choosing. So it's not a perfect analogy, but I
mm,
do think that there is something to when it's users and it's trading. Yes, they're going to want to be first. Trading is always going to want to be first, and we have Web 2 examples, TradFi examples for all of that. But I think over time we're going to start to see less and less of the transactions be originated from individual people, as opposed to other applications or frankly agents or other ecosystems that are working on top of Base and can choose the right allocation, but maybe also want to settle within a period, and bloat just becomes a factor of their cost structure because there's so many transactions that are trying to process.
mm. Yeah, it's an interesting one to see play out here. I'm pretty curious about. Yeah, I'm curious about this in general, and I'm starting to look more. The other thing about Hyperliquid that I'm still trying to fully wrap my mental model around is how much is an L1 really. Does it make sense actually to have this sort of enshrined DEX in an L1 if so much of the fees that are getting generated by that layer are from that, where transactions get priced? I don't know. It's an interesting. Interesting concept.
I think the question for Hyperliquid is they've got an engine and an ecosystem right now. Can they expand past that?
Right.
Is this the end all be all for Hyperliquid, or are they going to build an ecosystem where DeFi, where other applications want to build on top of it as well? And that, I think, is the core question for them right now. And yeah, I mean, I'm sure people are excited about it. I know some DeFi protocols are talking about integrations, but yeah, that I'd say that's kind of the core question for them.
The other thing too that's interesting, and I think protocols are starting to experiment with, is this balance in between first and third party applications. So there's been this blending of projects that are building both infrastructure and applications, and on the one hand, that makes a lot of sense, right? You build something that you hope is an ecosystem or a marketplace or a platform or whatever it is, and no one's just going to come there and build to begin with. So you might actually build your own first party apps, and there are lots of benefits to that. It's something to get people in the door. Maybe it's a way to subsidize your preferred business model on the infrastructure standpoint. The challenge is one of focus within the organization, two completely different org structures with maybe different comp expectations across those org structures. How do you make it all seamlessly flow together? Super difficult. You probably don't want to work for. Sometimes working for a startup, but then a startup is a little different than working for the startup itself. And so there are all these funny challenges that come along with it. But the big one that is frankly is just unanswered at this point, I don't know, is do other applications, third party applications, feel competitive with whatever the first party applications are that the infra team is building? And that's going to be the big question here.
This is a tale as old as time in the traditional tech industry. Just as we were talking about, AWS was an internal project for Amazon, and then they were like, "Oh wait, we can sell this to other people."
Yeah.
I think it's a question of like, where do you start? Is it the application, and you get users on board, and you've got a way to dog food your own infrastructure, and then you realize the infrastructure is valuable, and you want to open that up and sell it to others, or do you start with the infrastructure and you say, okay, like we're building this platform, but like we've got a couple apps here. We built them internally. And I think that, to your point, goes into organizational structure of whoever's building this. Like what is the primary focus? Like that's what startups are. They're just like a mechanism for focus, and successful ones can figure that out and navigate it well. Do you start by focusing on the application, or do you start with the infrastructure?
This is the chicken or the egg problem here.
Exactly.
Yeah. So there are I think really ambitious teams that are this feels like the trend right now that's happening. So you have Jito, I think is a good example of this, of someone that dog foods their own
Yep.
and like the synergies in between restaking and liquid staking, I think, are, and like the MEV infrastructure that they've built out, are really huge. Eigenlayer, to their credit, did this as well. There's restaking, then the first primitive, which is DA, they built themselves.
Right.
Um, Atlas from Ellipsis, yeah, lots of examples here, but that's going to be the interesting challenge.
Those are all great examples. I think the other just like thing to call out is that there was a period of time where if you were an application that wasn't like doing super hot, especially over the last few years, it was really hard to raise. It was really hard to move forward,
Yeah,
and you probably got a bit of a narrative bid, and potentially even like a fundraising bid if you were like, oh, we're actually going to turn this into an L2, and like our token is going to be used as the L2 token for this ecosystem. And
yeah,
so I think there's also a lot of noise in this analysis because I think many protocols or many applications use this as a fundraising mechanism to continue forward.
yeah.
And should they have, should they not have? Time will tell. But there definitely was that as like that was definitely a narrative for a while.
Okay, I've got one question for you. This wasn't on the docket, but I just remember that this happened this week. Is Max Resnick moved over to is taking his talents to Anza and Solana, and this is it's just without commenting on some of the gossipier parts of this, I'd be curious what your reaction was to this. And Max Resnick is someone who's been deeply involved in. We had him on the podcast maybe a month and a half ago or 2 months ago with Anatoly talking about multiple concurrent proposers. He's been very obsessed with this idea of censorship resistance in auctions, specifically at the block auction level, for a long time. And he's been internally leading a push to moving more activity back to the Ethereum L1, essentially.
Mm-hmm.
And so it's felt a little bit like an internal push away from I really view it as more of a moderation on the roll-up centric roadmap of just saying, hey, we need some more activity. We need to like roughly balance out the amount of activity that's happening on L1 versus L2s. I think he probably rustled some feathers. And, if I'm being honest, maybe sometimes the message was delivered in a way that felt a little maybe more callous than it otherwise could have to people, or it didn't react. I will say that to his credit, when you're trying to affect change, it's always going to feel like that, right? No one's ever going to thank you for it. But either way, it feels as though he wasn't able to get the momentum that he wanted on the Ethereum side. So he joined Anza, which is, I believe, a spinoff of Solana Labs, but now they're an independent team, which is one of the core contributors and devcos for working on Solana, the protocol. So he's going to be their chief economist there. So
Yeah, I mean, look, respect for Max, respect to Max for all of the stuff that he was pushing. I think we have to be in an ecosystem. Any of these ecosystems have to be able to take feedback and perspectives in an open way. And I think the critique of the Ethereum ecosystem is that um, it's potentially insular in its mindset and slow moving. And um, he was trying to change that. And so respect for that. I think the delivery, yes, was not perfect, but to your point, you kind of have to ruffle feathers if you want to, get noticed and break through the noise. And I don't know, the internal perspectives or why exactly he wanted to leave and join Anza, but I think that we're also in a phase now of a lot of people kind of like changing where they're working and changing what they're doing. And I know you saw Austin Fedora from previously Solana come out
yeah,
and with his new startup. I think you're seeing a lot of people who've been working over the last few years on foundations or protocols, or they're kind of like jumping into the next thing right now, as it feels like we're in a turning point for the industry. Not surprising that we're starting to see a turning point of what people are working on or making announcements around things that they've probably been thinking about for a while. It doesn't just happen overnight, let's say. And so, yeah, I mean, I wish him the best of luck. And I think, yeah, it'll be interesting to see what they do.
yeah, it'll be interesting. I agree. And Um, yeah, I basically echo all of your thoughts. I think it's really tough to put yourself out there and be, go against the grain, and people don't really thank you for it at the time, ever. I do think that probably, if I'm being honest a little bit, I think some of the way that message got delivered wasn't always the most effective, maybe. And I know there
Totally.
was this, yeah, but I'm interested to see what he does at Anza, and
The
yeah.
problem, I think, is that, and this is like a problem within crypto, is that broadly, I would say, is that you have a lot of really, really strong perspectives, and people are talking about things that people are arguing about the ways that things should work, but the timeframes are like years.
Yeah.
And it's not something that you're ever gonna like. No one's gonna be right and wrong as you're arguing on the internet, because the only time where you're gonna find this out is in retrospect, and
Mhm.
it's gonna be like 2028 will be like, oh yeah, he was right. We should have put more on an L1. Like, and so yeah, it is kind of like a thankless, non-congratulatory role to be the naysayer or the stick in the mud. But yeah, so respect for stepping out and doing that. But yeah, I think it's hard because everybody is right and everybody is wrong simultaneously until proven otherwise, and that time frame is years.
Michael, where do you sit on the activity on the L1 versus moving it up to L2s? Do you think there needs to be more balance? Where do you sit on that whole debate?
Um, I would say, look, I think we need more activity in general.
Yeah.
And there are use cases where L1 makes a lot of sense. I think we're one of the things that I previously thought that has changed recently was L1 is where all of the core RWAs will sit, because financial institutions will not feel comfortable putting things on L2s. And if that's
Mm.
the case, then we need to build applications and infrastructure around those assets. The Biddle product or any new like Franklin Templeton assets that are going on chain. I think that has changed in the last few weeks to months as you started to see them put those assets on L2s. And maybe they feel comfortable with the security profile now. Maybe everything will move to L2s, but I think generally you have to go where the assets want to go.
Mm.
And it seems right now that most of the assets still are on L1, which means that we shouldn't try to like convince people to pull their assets over to L2 so they can use things. We should just
Mm.
build these things where the assets are. And so, yeah, I'm generally in the camp of I agree. We should put more activity and more engagement on L1, and maybe that means we got to speed up L1. Maybe that means we got to increase the gas limit more than a 20% bump. I was hopeful that we'd see it higher, but yeah, I generally think we need more on L1 and more activity on L2s. And one of the other things too is like we're starting to see the blobs hit above their limit pretty consistently. Like that's another interesting chart that tracks almost perfectly with the election, which is kind of funny. Um, but I think you're going to continue to see, the blob limit surpassed, more and more. Like as we start to see these applications turn into L2s, or these L2s start to have more activity, I think these kind of like, um, you know, um, sleeping applications, let's call them, that didn't have a ton of activity, didn't launch, they weren't ready. I mean, there's so many things that are launching right now. There's so many things that are getting out there after everybody kind of universally recognizes the tide is shifting in the industry, that you're going to start to see a lot more L2s. And so maybe the L2 roadmap starts to speed up a bit in the next couple of months. Wouldn't be surprised to see that, but it has been positive from the L2 front over the last few weeks.
Yeah, it absolutely has. One thing too that is interesting to note is that maybe liquidity is slightly less fungible than you might think going from L1 to L2, or or these ecosystems are a little
Using a
bit
bridge is
stickier.
scary.
Yeah, it is, man. So I don't know. I was actually talking to, I think I've mentioned this a couple times on this podcast, but Uniswap is an interesting example here. When we did this Dex design season with Dan Robinson back maybe a year ago now, I was asking him why isn't more activity migrating up to Uniswap on different L2s? And he was like, search me. It's free for people to do that, but the vast majority of trading was still happening on L1, where gas fees is obviously much higher. And I was speaking to someone at Uniswap at DevCon this year, and it's kind of mentioning that users end up staying oftentimes, and this actually happens in between when like Uni V1 versus V2 versus V3 versus V4 gets rolled out. There's still an enormous amount of activity on the old versions, and Aave has this. So Aave V2 makes more money than Aave V3, um, even though they've jacked rates up and are trying to push people onto the new platform. And so, yeah, I think that there might be some amount of inactivity or stickiness or user preference to stay on one layer, and people might migrate much less than you might think that they would, just based on what their pure economic incentives are. So I think L2s need to go out and attract net new participants. It's not even the mental model of, okay, I was, have a user on L1. If I move them to L2, they're going to do X times more transactions. I'm not 100% sure if that holds for the majority of L1 users. And L2s are useful for going in and bringing net new people into the ecosystem. That's what it
I,
should
I
be.
agree. I agree. I do think that there is. I'd be curious. I saw Jesse posting about the countdown to a million ETH bridge to base.
Wow.
Which I'm sure at this point has probably hit. I think it was like 9,999 whatever last night,
Yeah.
so it's probably been hit. Um, but I'd be curious to know how much of that ETH is bridged from L1 versus moved over from a centralized entity. And centralized entity would denote like probably a net new user and someone who's taking assets from dollars to ETH and then putting it on base kind of thing, as opposed to something an asset that's lived on L1 for a while and is finally like okay, fine, I'll move it over. And yeah, I think bridging is scary. Native minting is kind of what I think of as being the core driver of growth of an L2. Like, do you have native minting of USDC? Do you have native minting of USDT? Or are you trusting in this bridge to keep your asset safe? And Coinbase helps with this on base, and that's why I think there's a huge advantage for base. But yeah, it's a scary proposition until bridging gets better, or you've got instant native bridging for most assets as well. like moving assets from L2s as well, which is not as actively talked about. But when you move assets from like Optimism, you still have a 7 day waiting period unless you want to take a hit on how much you're swapping, and the liquidity
Mm.
for a lot of the assets is pretty low. So, you're waiting 7 days to get your asset. They like literally get sent and they're not in your wallet anymore. And you're like, well, I hope these things come back. It's just like a terrible UX.
Yeah.
Um, so until all of these things are solved and you got instantaneous movement of assets and full trust in bridges, I think, this is why Max had a point.
It's really funny around the optimistic versus EK UX there. And I do wonder a little bit because on the one hand, it would probably be nice if all of these rollups were just ZK rollups. And from my understanding, that's roughly what the market thinks, is that over time, Optimism and Arbitrum are just going to become ZK rollups. But there's an incentive in there to not do that, right? That poor UX is actually a massive moat and definitely increases the stickiness of their users, because probably a lot of people don't fully know about that 7 day waiting period, or they're not thinking about it when they bridge to ape into some stupid thing. And then once it comes to getting the assets back off, people are like, oh shit, I forgot about this. All right, I'm just
Yeah,
going to keep doing it.
yes, but I think that would be, retail that's not necessarily that large, and therefore that, needing to pay attention as closely as a BlackRock who's going to say, like, where am I
Yeah,
putting my
totally.
digital assets, or Franklin Templeton. And so, like, yes, I think you can get a retail audience by them not knowing, and you can kind of like wax poetic until they figure this out. But, you're not going to get the big players to get involved.
Yeah. All right. I've got a final question for you here about just market psychology and in general, because I was pulling up the Bitwise predictions for 2025, which are great. We should go through some of those. You
Oh,
know
yeah.
what feels I was talking to Yano about this last night. It feels like one thing that's a little bit different about this cycle is that if I had to try to put my finger on it, everyone's expectations are a little bit more muted than they typically are when crypto runs the way that it has recently. And what I mean by that is usually when crypto and Bitcoin convincingly breaks his previous all-time high, you start getting these crazy predictions from people, and they're everything from really high price targets, people calling for 500K Bitcoin or $1 million Bitcoin, which Michael Saylor is doing in spades, but those crazy price predictions to things like Bitcoin is going to flip gold, or there are going to be, tokens are going to overtake the NASDAQ next year, or whatever it is. These kind of nutso predictions that you probably remember, and you could go back and listen to 2021 or 2022 predictions and get some of these. And it just doesn't feel like that's happening right now. Everyone's expectations are slightly more muted. If I had to guess what the market's expectation of where Bitcoin tops this cycle, it's like 125K or 150. You don't have many people actually thinking that it's going to be higher than that. And so
Hmm.
it almost feels like everyone's still hedged a little bit, or not as euphoric as they have been in previous cycles. Do you agree with that overall sentiment, or do you not?
Well, as much as I don't want to believe in the 4 year cycle, I think
Mhm.
everything about the 4 year cycle has played out so far.
Yeah, I agree.
And um, I think when you saw those crazy predictions, it wasn't happening in December 2020. It was happening in like September 2021.
Yeah, you're so right. Yeah.
And so thinking about us being in like the December 20 version of the history, I think it's rightfully so still muted. There's still a lot to figure out. I think anyone who kind of is in the know and has been paying attention, in particular to what's going on in Washington, understands that there is an absolute sea change. And while we don't necessarily know exactly how it will happen, we do kind of understand what the time frame will be, which is um, obviously you've got the ETFs and the inflows, like ETH inflows. Another
Mhm.
call out for like a spot on prediction was Matt Hogan talking about how he predicted that there would be net 1.5 billion into the ETH ETFs by the end of the year. Just complete bullseye that, and it didn't look like he was going to come close for a while, but has completely run up in the last couple of weeks post election. I think the what we do know about expectations around time frame for next year, which is what everybody's thinking about, like what's going to happen in the first half, what's going to happen in the second half. Well, the seminal crypto regulation that everybody is waiting for and looking for, even have like the New York Stock Exchange CEO come out being like, we are ready to work with blockchains. We just need to know how to do it. And Goldman Sachs saying we are also ready to do assets on chain. We just need to know how to do it. Everybody is waiting for this, and those are the major catalysts. We also have an expectation that it won't be until next fall that you get something, that's pen to paper or we're voting on. And yes, we already had the Fit 21 bill pass the House. That will probably be an outline of what is put into this next canonical bill. But things that are higher priority, frankly, are going to take precedence, in this next administration in the first half of next year. And so we know that there's going to be a positive market catalyst at the end of next year, which would divert from, the traditional 4 year, price action. So that's probably one of the reasons why people are muted. But I do think Tom Lee from Fundstrat had his predictions, and he's calling for 250K Bitcoin next year, and 237 I think is the math that he had, where it's a quarter the size of gold, and so a million Bitcoin or even higher than that is where you actually flip the market cap of gold. So we've got a long way to go before that. I do think that the 250K call out is it's not unreasonable to expect. And Tom Lee has been right more than he's been wrong.
Mm.
And he's definitely had some bad calls, but he's been right more than wrong. He also predicts that the S&P is going to go to 7K in the first half of next year and then settle somewhere around 66, 6,700 by the end of next year. And as context, we're at 60K right now. But I generally think that we're underappreciating how constructive next year will be from a regulatory front. I think that there's also going to be a lot of new budgets that open up in Q1, whether this is hedge funds, whether this is asset allocators, whether this is family offices that are just like waiting for the new year. I think that that is something that's coming up on the horizon. We have those conversations a lot, with investors in the space, allocators in the space. So definitely have boots on the ground perspective of that. And yeah, I think, we're also going to start to see not just regulatory change, but or legislative change, but the regulators are changing as well. Gary Gensler already said he's stepping down on January 20th.
Yeah.
There's supposed to be a vote this week to confirm Caroline Crenshaw at the SEC. That didn't happen. It's looking like it's going to be a harder sled for them to be able to get her reconfirmed. I think there's a lot of momentum on the side of Washington and regulators and legislators. And I think we are underappreciating how big that is. But once again, we're in December 2020 right now. The game hasn't even started.
I think that's a really good point. And I'm trying to remember what it's hard to even remember what you felt like at various different points. And, I have also probably my emotional reaction to this stuff has changed a little bit. I felt almost no euphoria yet this entire cycle. And so, yeah, probably this is if you're listening to this and you've lived through or been working in crypto for since the 2020 cycle. Yeah, probably I agree with that. It is probably best to match this to roughly December 2020. That's what the rough time frame is.
There's also a chart that I saw which almost perfectly matches the breakout of December 2020
Yeah.
with the I think it was the 3 or 5 day charts candles, and it's almost perfect to a T of what we saw in December 2020. And I think there's no reason to believe that, or no reason to suggest that it wouldn't be the same.
Yeah. And that's, the other point that you talked about, allocators moving into the space a little bit more. One of the things that we've missed a little bit this cycle compared to previous cycles is these huge 100 or $200 million funding rounds that we're going into, these big, like kind of the ledgers of the world or the Geminis of the world, the exchanges. That's a huge shot in the arm to the ecosystem because those are huge companies. They end up spending a lot of money. Those are big headlines. We just haven't really seen that yet. And
So yeah, 2 points. One, all of those things that you're talking about happened in 2021 last cycle.
you're absolutely right. No, you're so right. Yeah.
And number two, they were happening from traditional venture investors that were looking at crypto and trying to play catch up. And I would say, the Tiger Globals of the world and, Sequoias of the world throwing, hundreds of millions, billions of dollars into these rounds. And um, we have yet to see the non crypto natives come back. I was just having this conversation yesterday with another investor, crypto venture investor. It's like, when do we see that? And we saw the first, I think, or even do we see that? I'm still on the fence as to whether or not we see them come back in force and play catch up again. But we saw the first non crypto native round, I think this week with Lava.
Mm,
Keith Raboy and at Coastal Ventures ended up doing that deal, and I think Founders Fund with Joey ended up participating. But and it's like a centralized company. It's not crypto native protocol investing, but it's definitely a signal that we think about is to like, when do you start to see the Sequoias and the Greylocks and the whomever come back and start throwing money into protocol rounds, or do you? Because all of them got absolutely fleeced last time, and a lot of the people that were making those deals at those firms are not at those firms anymore. So it will be interesting to see, if and when and of what size they come back with.
so this is actually a great chart to look at because I think this chart gets misinterpreted a lot of the time, and so what we're looking at here is the amount of crypto VC capital invested and deal count, and it's broken out by quarter since 2016 to Q3 of 24. And so you can see, yeah, you're absolutely right. Basically, investment.
Q1 21 is where you see that first bar pop.
Yeah, 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 you're absolutely right. So and just like anything, but the reason I show this chart, and maybe it'll just be a little alpha or reminder of people, is this chart tends to get trotted out at the absolute worst times. And the logic that people will apply is look at how much VC is being invested into this space. This is going to hold everyone over. And it's evidence that a trend is going to continue rather than it's at its peak. And so,
Like, also keep in mind two things. Number one, the the timing of these announced raises is usually a pretty long time after the actual deals are done, like
mm,
sometimes even like 6 months after. So that's number one. Number two, keep in mind what was going on at this period of time. In 2020, we started COVID, and in 2021, every single thing went nuts. Not just
yeah.
crypto and not just venture, absolutely everything went berserk. And so there's like I think we won't see something similar to this at all.
Mm.
But we will see a jump, I think, in activity. I think once again the signal that is most interesting is non crypto natives chasing crypto native deals.
Yeah. One thing that would be healthy for the ecosystem, we've talked about it a little bit in the past, but there is so one thing that doesn't really happen very much in crypto because there haven't been many successful exits is later growth stage capital coming in. And so,
I would maybe push back on that.
okay, why?
Well, you're seeing, I mean, over the last year, you saw a bunch of different protocols raise at a billion plus.
Yeah, that's a good. So what it feels like is there are two markets right now. There is the traditional sort of market where you start as a private company and then you eventually either get acquired or you IPO on, you know, the Nasdaq or wherever you're trying to list. And then there's another route which is you launch a protocol and you launch a token. And it's starting to just feel like that is the capital market du jour or of choice for crypto native protocols. And I've been wondering yeah, I, how we always used to ask, does this really need a token? Um, I kind of think you're going to see just way, way more tokens on every sort of company which operates in crypto. I think this is one of those things where people used to say this for podcasts when we were first getting into podcasting, like the market's already so saturated. And Jason, my perspective was we're not even, we're at the beginning of a massive mega trend here. And I think that's what it's going to be for tokens. I think there are just going to be more and more tokens. And then if you can have this global, extremely liquid market of attractive assets, yeah, no, I know this. All right, here's a far out prediction for not 2025, but on a 10-year time horizon. Maybe eventually these sort of global token markets might actually end up competing with something like U.S. capital markets, which would be fascinating. But I can see it. I know I can see it.
You just basically rattled off most of or some of the pitch for framework. I mean, this is our entire thesis. and
Yeah.
that digital assets, crypto assets are a new capital asset class.
Yeah.
And what you can assume with that structural change, I mean, and it's not, people think about technology cycles and, you've got like, mainframes to PCs to internet to like mobile, social, blah, blah, blah. All of that is with the same perspective of you have equity as the primary capital asset for fundraising and funding innovation there. I think with AI, you kind of do have a question as to whether or not equity is the most viable way of funding for the major companies in that ecosystem. I would actually argue that something like private credit is probably more akin. And there's an existential question for the traditional venture class as to whether or not they're going to be able to play in the AI ecosystem and be competitive versus someone who's got tens of billions that can apply to the capital expenses that are required to build large language models. And so is there kind of a venture class of AI investable assets? TBD. But what I do know is that, especially with some of the changes, the market structure changes that we're talking about, what that means is that digital assets, crypto tokens, are a new capital asset class. And if you're an entrepreneur and you're starting something that is technical in nature and it's decentralized and it's going to be a protocol, you have two paths. You can raise equity for it and never launch a token and sell SaaS service fees, or you can launch a token and have it be the way that you fundraise, the way that you incentivize activity and engagement, the way that you have value accrual through decentralization. There's kind of no choice ultimately. And I think Bill Gates gets credited with this, but like people overestimate what's going to happen in 2 years and
Right.
underestimate what's going to happen in 10 years. And I think we're at that point where the 10-year is pretty clear, and it's probably going to happen much sooner than that. But yeah, I mean, our view structurally is that digital assets are a new capital asset class, and we need to recognize it as such, and that's what a market structure bill will do.
Yeah. I'm pumped for all this. I think people are still, there's sort of two camps here, which is I'm also pretty on board with it's hard to argue with the 4-year cycle at this point. It is played through to a T, right?
It has a perfect track record.
Yeah, perfect track record. So, okay. But at the same time, I do think that you have to take into account external factors, and the US embracing crypto is a pretty monumental change. And I think that the market is going into 2025 not quite bullish enough. One of our analysts, Boccaccio, likes to say, forgot how to believe. And I think people have forgotten how to believe a little bit. And
It's been 2 years of a tirade, and
yeah,
we've been beaten down, and it's like you peek your head out from behind the brick wall and be like, is it safe yet? Like,
yeah,
I feel like that's where we're at as an industry. And the answer is yes, it's safe. We are in a comfortable position. Everybody recognize it.
yeah. So I think 2025 is going to be a good year. I know we got to run now, but we should do a review of the predictions that we did going into this year. I have not revisited those at any time in
Let's
the last
plan
year.
that for next week.
Yeah, let's do that next week. Let's do that next week. All right, buddy. This was a fun one. I will see you next week.
Sounds good. Later.